Europe must end its dependence on Russian fossil fuels.
A lot of the solutions that will be brought to bear for Europe will be done by the large European players.
For God's sake, this man cannot remain in power.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Not seeking a regime change, Joe Biden tries to backtrack comments calling for the removal of Vladimir Putin. Ukrainian and Russian negotiators are set to resume in-person talks this week. Oil retreats as China's worsening virus resurgence raises concerns about demand in the world's biggest crude importer. Tesla suspends production at its Shanghai plant amid restrictions. Plus, the global bond rout continues. The BOJ steps in to cap the rise in JGBs. The gap between 5- and 30-year yields inverts for the first time since 2006. And that's our biggest story today. So let's quickly check on the markets, because this underpins everything that we've been talking about, and it probably underpins everything that we'll see in the future. The European stock 600 getting some 0.6%. A Bloomberg headline just crossing the terminal a couple of minutes ago saying that markets are now pricing in 4 hikes from the ECB this year, or certainly in the next 12 months. It's not quite this year since we're in March. It'll be interesting to see whether the ECB is okay with that or whether they try to talk it back. The U.S. 2-year yield 2.394, and you can see because of this widening bond rout that's really accelerating, the biggest bond rout in modern history, means that the BOJ had to step in. It depends on whether you trust a lot of the FX traders or the bond traders to call it right, but you can see dollar yen 123.94, and then we go to Warsaw to our Anne-Marie Hordern, where we talk about crude oil currently at 109.41. Just a reminder, there is OPEC Plus this week. It's virtual. There is a lot of talk also about how we wean our dependence of Russian gas and oil. So this is a picture for the markets. It's really the DAX that's leading the gains. Most sectors are on the move. The upside, the DAX gains on 1.1%. You can see the CAC 40 0.9% higher. Now, President Biden has tried to clarify his call for Putin to be removed from power, saying he was not looking for regime change. Now, it comes as European allies raised concern and critics warned he was inflaming tensions with Russia further.
We will have a different future, a brighter future, rooted in democracy and principle, hope and light, of decency and dignity, of freedom and possibilities. For God's sake, this man cannot remain in power.
Now, for more, we're joined by our Washington correspondent, Anne-Marie Hordern. Anne-Marie, I know his team are trying to walk it back, saying it was maybe his personal statement, he was influenced by refugees, but he did call for regime change. Is that not what the U.S. wants?
It isn't what the U.S. wants, and this entire speech was almost building to this moment, which we now know was unscripted, and the president said this man cannot remain in power. The White House immediately responded, saying this was not a change of policy. And then, Francine, over the weekend, we heard from the president's top diplomat, Secretary of State Antony Blinken. Take a listen to what he had to say.
As you've heard us say repeatedly, we do not have a strategy of regime change in Russia or anywhere else for that matter.
And then the president himself, Francine, was asked about this in Washington, D.C. Were you calling for a policy change? Were you calling for regime change in Russia? And he said no. That was his answer. But the issue is he did say this. And that is why you have leaders like Emmanuel Macron and the UK government coming out and potentially saying we should tamper down this rhetoric, because obviously they are trying to de-escalate what is going on in Ukraine.
Yeah, frankly, a lot of people would probably argue the fact that it wasn't helpful. President Biden also spoke from a NATO country, Poland, where you are on the border of this war. So what was his message, Anne-Marie, to NATO?
So his message was very clear off the heels of his meeting as well at the NATO headquarters in Brussels. The president has been wanting to make a very strong plea for NATO unity, and also the United States is sending more troops to the eastern flank of NATO. And this is something of concern of everyday Polish people, because how close they are to the border, obviously the border country of Ukraine, and even a missile hitting miles from that border within Ukraine, there has been concern. But the president made it clear that the United States stands firmly beside Article 5. Take a listen.
Don't even think about moving on 1 single inch of NATO territory. We have sacred obligation We have a sacred obligation under Article 5 to defend each and every inch of NATO territory with the full force of our collective power. Russia wanted less of a NATO presence on his border, but now he has a stronger presence, a larger presence, with over 100,000 American troops here, along with all the other members of NATO.
And that larger presence, Francine, I asked as Press Secretary of the Pentagon, John Kirby, at NATO HQ, is this something that we can see in the future? Is this something that may remain a stronger U.S. presence in Europe? And the short answer was maybe.
Great reporting on the ground. Our Anne-Marie Horder there, our Washington correspondent in Warsaw. Now, markets kicking off the week in a risk-off mode. The steepest global bond rout of the modern era is deepening this morning. Treasury sliding, a key portion of the U.S. yield curve has inverted, and the Bank of Japan has even stepped in to cap the rise in yields there. Well, we're joined by Bloomberg's markets editor, Cristina Quino, and also joined by Claudia Panseri, head of equity strategies and tactical asset allocation at UBS Global Wealth Management. So thank you both for joining us. Cristina, it's not quite risk off, because actually if you look at equities, they're still rising, not a huge amount, but actually there's still this differential in play on how both asset classes are looking at inflation.
Absolutely, Francine. It is quite the puzzle for investors at the moment because, again, we've been used to this environment of, when yields are rising, then you're usually seeing equities selling off as well. But I think there's a bit of a difference now. And that has to do probably with some of the catalysts of this latest move. I think what really is pushing bonds this time around is that, again, realization that the idea of a bumper Federal Reserve rate hike or other rate hikes from other central banks is back on the table. That story kind of took a backseat to the Russia-Ukraine war in earlier this month, but I think that really is becoming more front and center now. Meanwhile, I think equity investors still kind of trying to digest this news, and you know, I think they've kind of gotten used to the idea of faster rate hikes and more rate hikes from central banks already, and so you could argue that maybe a lot of that is already priced in.
Yeah, and Claudia, I guess there's a huge also repricing when it comes to markets expecting the ECB now that, you know, crossed a couple of minutes ago, expecting the ECB to hike 4 times this year. Are they freaked out about central banks front loading because we don't know what inflation looks like further down the line, or is this big move in bonds warranted?
I think a lot is pricing. In US, the 2 years we have seen the move has been impressive over the last few weeks, and a lot is being priced in the Eurozone as well. Probably a central bank will start hiking, and then they will try to understand which impact this rising rate will have on the economy, probably before to make a step back. So the market is, I was listening, but I believe the market is also reacting well because rising rate mean as well a lower risk of stagflation. And stagflation is quite a negative for bonds and equity as well. So the fact that central banks are reacting, that could also continue to support equity going forward if the economy stays strong.
Yeah, I love the chat, Christine, also, and Claudia. I mean, some of it is, oh, these traders, they don't know how to bond what we're looking through. This was not like 1984. Everyone's too young to be able to deal exactly with what we're seeing. What does the inverted yield curve tell you, Christine, about what's coming?
Well, Francine, it really is mixed messaging now. And it's actually a fair statement to say that this really is not your grandfather's bond route, you know. This is really a new territory here. And I think, you know, what we were discussing on the desk actually is not just necessarily that inversion of 530s curve, but also its contrast with the shorter term yield curve, which Jay Powell has drawn a lot of attention to. This is the 3-month, 18-month spread, and that actually is steepening a bit more. And so you have this contrast between a shorter yield curve steepening and a longer yield curve inverting. Yeah. And, you know, I think where that intersection lies is really to do with how markets are digesting the rate path, you know. And so I think it would be really interesting to see, you know, whether markets kind of get on board with this message from Federal Reserve officials of faster and more front-loaded rate hikes, or will they kind of approach that with a bit more of a measured pace? And also, more importantly, when will they start looking for that first rate cut? At the moment, we're seeing that 2 months or 2 years out into the horizon. It'd be interesting to see if that starts getting earlier and earlier.
Okay, I love that, Cristina Quino, with really, you know, not your grandfather's bond route. It will be symbolic in my head also because the bond market was so much smaller smaller at the time. Claudia, give me a sense of what it means for equities. I know you're still constructive on equities, but at some point we'll probably have to see a correction if this stays on. So is it just a problem of time that they need to play catch up when it starts hitting margins?
I think it depends also about the earnings season and what the company may continue to release in the coming month. People are concerned about the fact that you have a rise rate, and so you have multiple contraction, but as long as the earnings will keep going and growth remain positive, I think there is still more support on the equity market. For investor, it's very important to be selective. We have seen dispersion across sector and region. The way we look at this kind of market, we keep our value exposure and our exposure to financial, which usually behave as an edge to rising rate, especially when the economic growth remains strong and especially when the earning side is still positive.
All right, thank you both for joining us. Our Christina Kino, there, Bloomberg's markets editor, Claudia Panseri from UBS Global Wealth Management stays with us. Priorities later on in the program. We'll also be joined by the war studies expert, Frank Ledviga, who discusses the latest combat dynamics. That's coming up later, and this is Bloomberg.
My colleagues and I may well reach the conclusion that we'll need to move more quickly.
Faster is better.
An extremely aggressive rate path is appropriate today.
If we think it's appropriate to raise 50 basis points at a meeting or meetings, we will do so.
If it's appropriate to raise interest rates by 50 basis points at a meeting, then I would think that we should do that.
Maybe if 50 helps, I'm open-minded about that. 50 basis point moves would definitely be in the mix.
If we need to do 50, 50 is what we'll do.
I don't think 50 basis points should be off the table.
I have everything on the table right now.
It could be 25, it could be 50, it could be 75, it could be 1.
We've had periods of history where we've had a soft landing, and so it's not unusual that we can achieve that.
The economy is very strong and well positioned to withstand tighter monetary policy.
There you go. U.S. Fed leaders discussing a potential more aggressive policy in the months to come. 50 basis points is on the table in case everybody didn't get the message. Now, we also have some breaking news out of the Bloomberg terminal. Spain planning 16 billion euros in aid through June 30th. This is according to the Prime Minister, Mr. Sanchez. So we'll see exactly where it goes. And of course, the flip side to that, what it means for the deficit. We'll see exactly the fault lines for some of these countries and what it means for, of course, a stability pact and some of maybe the outfalls that we've seen for that. The Spanish 10-year yield 1.490. Now we're back with Claudia Panseri, head of equity strategies and tactical asset allocation at UBS Global Wealth Management. Claudia, thank you so much for staying with us. A couple of questions, first of all, on regionally, and you did tell us about some of the sectors that you like the most, but Europe is so close to Russia and has more to lose if there's energy, gas, and oil being cut off. Regionally, what's your favorite region when it comes to equities?
We cut back Eurozone, which was one of the regions we like a lot at the beginning of the year, but with the start of the conflict, we moved from most preferred to neutral. I have to say that this time around, we have been more focused on sector rather than region. The different way we look at the market is where we could take profit from higher energy price and from higher interest rate. So the best way is really to go through the sector and go through the stocks, the different styles. So I was mentioning value, financial, but also we have a big exposure to energy stocks to take profit from the high energy prices.
So you prefer commodities, you prefer value sectors. What needs to happen for you to go cold on some of these sectors?
I think for the time being, we are very comfortable because we still expect the rate to move higher, but we also expect the economy to remain strong. So we are comfortable with this exposure to value overall and preference of value versus growth. I think what will make us changes will be a different view or different environment about economic growth and earnings. If the tightening financial condition plus the rise in commodity price will put the earnings growth, economic growth under pressure will probably switch out of value. But this is not our central scenario for now.
When you look at food, national defense, and climate, Claudia, what's your overall take on these, sectors that are specifically affected with the war in Ukraine?
Yeah, so this is the reason why we have this exposure to energy in particular, because we are concerned about the rise in commodity price and supply chain disruption on some other sector. We tend to remain very concerned, very focused on this energy and commodities overall. We are negative, for instance, at the global level on sector which are negatively impacted by rise in rates, such as real estate and consumer staples.
All right, Claudia, as always, thank you so much for your time. Claudia Panzeri, their head of equity strategies and tactical asset allocation at UBS Global Wealth Management. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, China is grappling with a number of COVID outbreaks across this country, the worst since the pandemic began. In an effort to curb the spread in Shanghai, the city of 25 million people is being locked down in 2 phases this week for mass testing of residents. Well, for more, we're now joined by Bloomberg's Alan Wang, who's in Shanghai. Alan, so what exactly are the latest developments on the ground? You can't leave the house, you can't drive.
Well, that's right. Well, for me, I'm in Puxi, and it's not going to affect me until Wednesday, when basically I won't even be able to leave my apartment. But right now in Pudong, since this morning, people can't leave their apartments. There's no subway or bus service, and a lot of companies have had to suspend production, including Tesla, has had to start to suspend its production for the next 4 days. And financial companies are calling it, last night actually, when the announcement was first made, a lot of financial firms told the traders, come on in right now, because otherwise you're not going to be able to get in. And all these contingency plans are being executed right now.
So, Alan, what are the economic and business impacts from the lockdown? I know people can't protest, but are people just fed up?
Well, yes. I mean, 2 parts. First is economic impact. Right now, NatWest just came out with a forecast saying that they expect a 0.4 percentage point cut in growth in the first and second quarters due to the lockdown. And it's already, the government announced a very ambitious growth target for this year early this month, and it's becoming even harder now that we have this lockdown, which is going to dampen, of course, consumption as well as restrict travel. And on the second part of the question, in terms of frustration, yes, there's immense frustration. I've been getting videos from folks, showing people getting into fistfights inside supermarkets. Wow. There've been a lot of complaints, of course, on WeChat and Weibo. Yeah. And all because
Alan, very quickly, what happens next? So can China actually stick to their zero COVID policy?
Well, they're trying really hard. The thing is that they are showing some signs of flexibility. Just yesterday, the neighborhood committee where I live, they came upstairs and gave me a rapid antigen test. Instead of having to wait online for hours, they're allowing us to self-diagnose using these rapid tests. So there's some flexibility. But by and large, I think that the government is going to stick to its zero strategy. But what happens if cases continue to spike up like they are doing right now? Is Shanghai going to build makeshift hospitals like we see in Jilin province in Qingdao?
Alan, thanks so much. Bloomberg's Alan Wang in Shanghai. Not seeking a regime change while Joe Biden tries to backtrack comments calling for the removal of Vladimir Putin. Ukrainian and Russian negotiators are set to resume in-person talks this week. Oil retreats as China's worsening virus resurgence raises concerns about demand in the world's biggest crude importer, while Tesla suspends production at its Shanghai plant amid restrictions. Plus, the global bond rout continues. The BOJ steps in to cap the rise in JGBs. The gap between 5- and 30-year yields inverts for the first time since 2006. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, in the last couple of minutes, we also had that headline crossing the Bloomberg terminal. The UK government is investigating cutting contracts with Russia suppliers. Now, what we understand is that the guidance issued to the public sector recommends that public bodies, including government departments and hospital, immediately seek to identify any contracts with Russian or Belarusian companies, and if possible, to switch suppliers with minimal disruption. So we'll see exactly where that ends up, but how many of these contracts are still in place. The other thing we need to watch out for is, of course, the huge risk-off move that we're seeing in bonds, but not so in market or in stocks. Now, this is extremely significant because if you look at the bonds route, the biggest in modern era, it's really flashing some growth signals, and stocks are pretty much mixed. So the U.S. two-year yield, 2.3825, that prompted also Mr. Kuroda of the Bank of Japan to intervene. So you can see dollar-yen at 124.04, and then crude oil, we always look at crude oil, a major part of the inflationary pressures, 109.39. Now, President Biden has tried to clarify his call for Putin to be removed from power, saying he wasn't looking for regime change. Now, it comes as European allies raised concerns and critics warned he was inflaming tensions with Russia further.
We will have a different future, a brighter future, rooted in democracy and principle, hope and light, of decency and dignity, of freedom and possibilities. For God's sake, this man cannot remain in power.
Well, we're now joined by Wolfgang Munchau, director of Eurointelligence. Wolfgang, I don't know what you find more shocking, the fact that actually he said that, possibly inflaming tensions, or whether he said it and said, oh, but that's not what I meant.
Yeah, I think that's a good question. I think I think the shocking thing is that he said it in the first place. He had to retract it. It's already caused damage, and it's in politics. Obviously, you can say, I'm sorry, I didn't mean this. But what you do is you reveal what your policy is, or at least what you're discussing. And what you do is you give Putin the ability to say, well, that's what they want to do anyway. They revealed their preferences, and I now have I now can see. I can even construe this as if I wanted to, as a declaration of war, or I have the right to hit at Western targets. Very dangerous. Already led to a change in policy in the West over the weekend. This is very visible in Berlin and Paris.
So it's harder to de-escalate from here?
Well, I think what the Europeans are doing now is they are cutting off from the American strategy and are now doing their own thing. You saw the initiative by Macron over the weekend to seek direct talks with Putin over a ceasefire. The Germans, quite interestingly, have essentially stopped the arms deliveries to Ukraine. Scholz is very adamant that he doesn't want to accelerate it. Yeah. Behind the background, I understand he is slowing things down. Mm-hmm. Because he's now seeking direct contacts with Putin. So
does that mean that he seeks a way out of this? Again, and will it be, we heard from President Zelensky of Ukraine, they're okay with neutrality, but won't concede even an inch of their territory. Is this something that Putin will accept?
That's very difficult to say, and I think at the moment it looks like Putin is the obstacle to any deals. What I do, however, believe is that the Europeans, the Germans and the French would be willing to pay a higher price in terms of Ukrainian sovereignty than the Americans are. They might just say peace, I wouldn't go quite so far to say it's peace at any cost, no. But they would probably say, they would probably weigh and put pressure on Ukraine to accept a peace deal, because they realized that if the Americans go, I was reminded of 1981 when Ronald Reagan talked about a limited nuclear war in Europe. Yeah. And this is still sort of, Europeans still have that fear that the Americans are playing their own game, they're raising the risk and may have a higher risk readiness than we do.
Wolfgang, are sanctions working? And actually, to me, it's unclear what sanctions are meant to do. They give a message of that this is a red line, we will attack and sink your economy. But does it make Putin back down?
No, we didn't think this through. The sanctions, we should not have started with the central bank sanctions. That is the last thing we should have done, and maybe in the final thing, we should have started with oil sanctions. But we can't do this, so we chose sanctions that were easiest for us rather than trying to understand or trying to define what purpose they have. Now, Putin can finance his war with rubles. He doesn't need to import goods, at least not immediately. But if we wanted to stop him over, say, a period of 6 months to 1 year, yes, the oil and gas sanctions would have a massive impact because they would deprive him of the oil revenues. Now, that would have been the first thing we should have done. Now, Nord Stream 2 is cheap, it's good. I've been asking for this for a long time, but it's no oil flows through it. It has no operational significance.
But so the sanctions put in place, what was the thinking behind them? That it puts internal pressures? I mean, we know that people can actually go to the streets and go against Putin. There's almost no opposition. So, how are we expecting something to happen in Russia?
I think it's muddled thinking. The sanctions, we think that sanctions work against, a country like Iran, the same they work for a country like Russia. But Russia is infinitely bigger. Russia is sitting on oil and gas and precious metals, whose prices have actually increased since the outbreak of the war. And Russia has found ways to circumvent the sanctions. It's not only that they're getting, money from us, 700 million euros a day for their oil and gas sales, but they also found systems through correspondence banks in China. The complex nodes of the global financial system make it possible to hide transactions. And I know Bloomberg, you reported this morning about the oil tankers, the Russian oil tankers, and all that
have
stuff
gone dark, basically.
Absolutely, and this is all happening.
Yeah, and I was speaking to an expert in this saying, we'd seen that with Iran at the time as well. What do we end up with? So it also seems like the world is divided. India has not really come up, saying they, don't support what Russia has done. We have the same with China and other parts of the world. Are we going to see a split world?
We're going to see very much a split world. And I would actually expect we might even see a split transatlantic alliance, partly also because of Biden's comments. I believe the Germans will not go back on their oil embargo refusal. They have now got a plan to do this over 3 years. I don't actually believe it. I think it will take them longer, but at least that's the plan. They might get out of oil a little earlier than that, coal as well. There's going to be a split, and a lot of his messaging is not addressed to us, it's addressed to the BRICS, like Brazil, China, India, South Africa, and it seems to be working for him. So.
Wolfgang, very quickly, are you expecting some kind of default in Russia to turn ugly, to spill over?
You mean a financial default?
Financial default.
No, I don't expect him to. I think he will. I think he will honor his contracts. He will also honor. I also think the ruble payment thing will blow over. That's not my fear. I think he will. That's a smart thing from him not to default. That would be a huge mistake if he did that.
All right, Wolfgang, thank you so much. Wolfgang Munchau there, Director of Eurointelligence, joining us with the very latest, of course, on Ukraine and Russia. Now let's get to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. A consortium led by Australia's Macquarie has agreed to buy a 60% stake in National Grid's gas unit. The deal values the UK transmission business at more than $12.5 billion. National Grid announced plans to sell the gas division last year as it transitions to a low-carbon future. It includes a 7,000-kilometre pipeline network. Now, the FT is reporting that HSBC has been editing research reports to remove any reference to the war in Ukraine. According to the paper, HSBC committees have softened language in multiple reports, including changing the word war to conflict. This is as the lender resists pressure to join peers in closing its business in Russia. An HSBC spokesman declined to comment. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, we're just getting some breaking news out of the UK. The UK 10-year bond yield rising to 1.75%. That's the highest in 2016. Of course, this will add more pressure on the Bank of England, the first one to accelerate its rate hike because of inflation. It will put even more pressure on the BOE to continue on that path. Now, coming up, Russia says it's reframing its war priorities. We'll be joined by war studies expert Frank Ledviga to discuss the latest combat dynamics. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now, Russia says it's reframing its war goals in Ukraine after failing to take over the capital of Kyiv and knock out the government. According to the head of Ukraine military intelligence, Russia now wants to split up Ukraine and carve out a separate Moscow-controlled region. Well, we're joined by Frank Ledwidge, a senior fellow at the University of Portsmouth. Now, Frank is a former military officer who served in the Balkans, Iraq, and Afghanistan. He's the author of Losing Small Wars and Investment in Blood. Frank, thank you so much for joining us. What, if anything, at this point will make Vladimir Putin back down?
Well, at the moment, the Russians have reached what's called their culminating point, which means they can't really go any further. And despite lots of reports, and you'll have heard those reports that the Russians have millions or hundreds of thousands of reserves, they haven't. That's not true. They're not ready. So they've gone as far as they can go for now, and I'm talking now for the foreseeable future. So we're at a point of stalemate. Ukrainians have won this phase to the extent that they've prevented the Russians from achieving any of their major objectives. So what could make Putin back down is your question.
Yeah, I mean, I understand this is an advancement of troops on the ground, but if the shelling continues with the force that we've had it so far, they could reduce a large part of Ukraine to rubbles like they did in Aleppo, Syria.
Well, that's right, and I think that's what they're going to do, although they'll probably reframe their campaign and focus it on one or two areas, down in the Donbass and probably in Kiev as well, I think, to fix the bulk of Ukraine's forces in both those areas. But there are weapons that the West hasn't used yet, and I'm not talking about the big ones. I mean, we hear very little, for example, about the cyber campaign, which I'm certain is furiously raging now. And there's plenty in the West's arsenal there, which certainly would act as a deterrent to Putin were they to deploy it or even threaten to deploy it.
So, Frank, what happens next? What will make Vladimir Putin back down? He's rearranged, or he's expected to rearrange the war. How many troops will he need on the ground if he does win those parts to then secure them?
Well, what he's going to do now is he's going to reframe the campaign on the ground. It's likely that certain areas there'll be withdrawals. The Ukrainians are already gaining ground, although particularly in that northeastern area around Sumy. So they're pushing back. Fairly small gains at the moment, but significant. And the Russians are going to have to dig in there. And paradoxically now, the Russians are going to have to go on the defensive in those areas so that they can focus back on the Donbass area and, of course, the key central gravity Kiev. Kiev will not be taken now, but I suspect it will be shelled. As I say, we've not seen the West deploy or Ukraine deploy cyber yet, or space.
Frank, I guess I don't know how difficult it is to verify how many Russian forces have lost their lives and how difficult that is for Vladimir Putin to justify back home, where there's a big campaign of disinformation and where very few people understand what's going on.
Well, that's right. I mean, I would suspect that Allied estimates or Western estimates of between, probably now we're looking at about 9,000 to 15,000 dead are about right. However, it must be said, and I know it's cruel to say it, most of those losses from the intelligence we've seen, credible intelligence we've seen so far, are from the Russian periphery. They're not striking at the heart of Russia yet. Many of them are from the peripheral and poorer republics. And from Putin's perspective, those are expendable.
All right, Frank, thank you so much. I mean, horrific to think like that, but very interesting insight that you have. Frank Ledwidge there, a senior fellow of the University of Portsmouth, joining us, of course, on some of the war efforts by the Russian side. Now, global bond markets are seeing their steepest sell-off of the modern era. Treasury sliding, the gap between 5- and 30-year yields inverted for the first time since 2006. Meanwhile, Bitcoin has erased all of its losses for this year over the past 2 weeks. The stealth rally pushed the crypto above $45,000. So for more on all of this, Bloomberg's cross-asset markets reporter and crypto czar, Joanna Ossinger, joins us from Singapore. Joanna, good morning, good afternoon for you. Talk us through some of the day's most significant news in the bond market and the read across, of course, to Bitcoin.
Yeah, so Francine, it just looks like this bond rout shows no signs of stopping. The momentum is really all in one direction amid expectations the Fed is going to lead that wave of central bank tightening. with the Russia war in Ukraine, just adding to inflation woes, right? So you have Australian 3-year yields reaching the highest since 2014. You have South Korean 10-year yields above 3% for the first time since 2014. So it's really a global story at this point. And of course, you even have things like the 3-year US yields are extending gains versus their Chinese counterparts after climbing above them last week for the first time since 2009. So there are just a ton of things, including the curve inversions. You mentioned that the 5-year, 30-year has inverted first time since 2006. So we're really seeing all these indicators about worries in the market, possible indicators of recession, things like that. The Bank of Japan even stepped into the market to cap yields after the 10-year went to 0.25%. And of course, the yen is now near 125, so it's the lowest since August 2015. And then you have Bitcoin, as you say, which is looking actually like it's gaining momentum. So it's kind of a bright spot if you look at an asset where it's finally broken above 45,000 and is getting higher.
I was going to ask you, Joanna, about Bitcoin and the significance of today's price action.
Yeah, so actually this is pretty interesting that it's just been stuck in that range of 35 to 45,000 for several months now. It finally has broken higher. Bitcoin is such a momentum asset. When you start to have something like that where it breaks really above, say, its 50-day moving average, it can augur really big gains in the future. In fact, Bespoke did a study saying that after it's this much above its 50 DMA, it is often doubled within 6 months. So watch this space on Bitcoin, and we'll see if the momentum can carry it this time.
Joanna, thanks so much. Joanna Ossinger there, a Bloomberg cross-asset reporter and crypto czar in Singapore. Welcome back to Bloomberg Surveillance, early edition of Francine Lacqua here in London. Now, we're just getting some pretty big moves when it comes to dollar-yen rising to 124.53. Now, we did see it briefly touching, I think, 125, if I'm not mistaken. Or certainly that's the level that we're watching out for, currently at 124.77. There are interesting pieces also from Bloomberg Intelligence or Bloomberg Economics saying that the Bank of Japan's intervention to keep rising bond yields in check came later than some in the market had expected. So basically, the central bank waited until the last possible minute to pull the trigger. It's really the timing of the intervention and not the move itself that is significant, according to Bloomberg Economics. Now, President Biden has tried to clarify his call for Putin to be removed from power, saying he was not looking for regime change. It comes as European allies raised concerns and critics warned he was inflaming tensions with Russia further.
We will have a different future, a brighter future, rooted in democracy and principle, hope and light, of decency and dignity, of freedom and possibilities. For God's sake, this man cannot remain in power.
Now, for more, we're joined by our Washington correspondent, Anne-Marie Hordern, who's in Warsaw, Poland. Anne-Marie, for many, this was the main takeaway of the speech. We just spoke to also Wolfgang Munchau, who says this could be a breaking point where we see actually the way that the U.S. is handling Russia will be different to what the EU will do.
Yeah, and we've already seen comments really trying to temper what the President of the United States said from Olaf Scholz, who said that is not what the NATO allies are intending. Also from Emmanuel Macron, who says words are important, and right now we should be trying to de-escalate the situation. Francine, I got to tell you, over the weekend, the White House has been working overtime to try to soften that comment from the president. Take a listen to what Secretary of State Antony Blinken had to say.
As you know, and as you've heard us say repeatedly, we do not have a strategy of regime change in Russia or anywhere else for that matter.
So the White House is trying to make it clear, Francine, there's no U.S. policy or strategy for regime change in Russia. But at the fiery end of that speech that lasted about 26 minutes long right here in Warsaw, in the capital of Poland, the president did say this man should not remain in power.
Yeah, the problem is that once you say it, even if it's not the actual policy, people think that it could be. And energy definitely in focus. What do we know on this front?
So energy has been a really big focus of this trip because it is the one part of the Russian economy that's been pretty much unscathed because Europe is so reliant on natural gas and oil from Russia. And what we saw from Brussels with Ursula von der Leyen, the president, talking about a task force to try to bring more LNG in, the president mentioned energy in this speech. Take a listen.
Europe must end its dependence on Russian fossil fuels, and we, the United States, will help.
Well, that was Anne-Marie Hordern, our Washington correspondent in Warsaw. So we'll have plenty more, of course, on this throughout the day. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller, Kailey Leinz in New York, Anna Edwards here in London. We'll look at the foreign exchange markets reacting with this global bond rout. This is Bloomberg.
The inflationary pressures are likely to last for an extended period.
You look across asset classes, there's very little basically priced in for a change in the inflation regime.
There are no alternatives to equities in some ways because the bonds look toxic, and with the inflation, cash looks toxic.
We're going to be looking at a growth shock and a further down the line. I think that's what the yield curve is telling you right now.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, March 28th. Our top stories today. The biggest global bond rout of the modern era gets even worse. Treasuries are sliding, a key portion of the U.S. curve inverted, and the Bank of Japan steps in twice to cap the rise in yields. President Biden is trying to clarify his comment that Vladimir Putin should be removed from office. He says he was not calling for regime change. And the city of Shanghai will be locked down in 2 phases to conduct a mass testing blitz for the coronavirus. The Tesla factory in the city will be shut down for 4 days. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. And Kailey, a real divergence across the Atlantic in terms of risk appetite today.
Yeah, absolutely. And the risk appetite definitely wasn't really present in Asia. Equities were down, broadly speaking. The MSCI Asia Pacific Index falling by about 0.5%. China, an underperformer within that, is Shanghai. At least part of the city is in lockdown to curb the spread of COVID-19 there. But really, the story was not in equities. It is instead in other asset classes like the bond market, where you see the continued selling pressure in global bonds. That was evident in Australia, where the 2-year yield rose 21.5 basis points at 1.795. That is the highest for that yield going back to February of 2019. And then in Japan, the 10-year JGB yield is north of 25 basis points, 0.251%. That is above the top end of the BOJ's range, even in the face of the BOJ announcing overnight 2 unlimited bond buying purchases in the same day. Really an unprecedented move to rein in what we're seeing in the bond market. And it really underscores the easy policy consistently from the BOJ, while you're seeing other central banks turning quite hawkish. So really speaks to a monetary policy divergence, and that is leading to continued weakness in the Japanese yen. North of 124, actually got a taste of 125 to the dollar, the weakest level for the yen going back to August of 2015, Matt.
All right, definitely something that we're watching closely. S&P futures right now, very little changed. And Anna, you know, traders tend to sit on their hands a little bit when Will Smith slaps Chris Rock. I mean, we can't talk about anything else. Nothing else seems interesting until I see this. 10-year yields at 250, almost as unbelievable as the Oscars. Coming up about 3 basis points right now. We're already at the 2.5% that a lot of people had been calling for year end, and we're not even quite to the end of the first quarter yet. NYMEX crude down almost 4%, still around 110 a barrel. And look at Bitcoin, $47,057. It just continues this slow and steady rise over the past few weeks, now erasing all of 2022's losses. So even with the Oscars, there's still a lot going on in markets today. Even with futures unchanged, there's still a lot going on in markets today.
Yeah.
Absolutely, there certainly is here on European stocks, but on that Will Smith story, I mean, one of the best read stories across the Bloomberg terminal. So in the Bloomberg universe, clearly many people care about that one. This is the picture for European stocks, and this is the divergence I was talking about there, Matt. You referenced being pretty flat to negative on US futures. That's been the story through much of the European early session. But European stocks moving to the upside. So a bit of divergence there, despite concerns around China and Omicron, despite the war, of course, taking place not all that far. In fact, just to the eastern side of this map, in fact. Let me show you what is lifting markets. Autos and auto parts doing pretty well today. Also the banking sector up by 1.6%. That rising yield environment certainly could do well for some in the banking space. The Brent crude price down by 3.3%. So is it concern around China that is taking the edge off what we're seeing in oil markets? We look ahead to an OPEC meeting later on this week. I put in the UK 10-year yield here as well, just to underline the point that this is a global story, of course, the rising yield environment. Yes, the Treasury curve is a real focus for us at the moment, but we are seeing this global push higher, certainly in developed markets, this push higher in those yields. Although the UK story is really interesting because just recently markets have started to price in over a two-year horizon around 25 basis points of cuts in interest rates. A real concern that inflation goes so far, it starts to dent demand, and that's what markets are now starting to focus on. I put in InPost. This is a Polish business, and given Poland so much in our thinking at this point, given recent news flow, a Polish company, it does delivery lockers for online shopping. There's a lot of M&A interest in this particular business right now. Perhaps buyout firms might be interested in it, and the stock is up by more than 30%. Let's show you some Russian assets as well, because these are really front and center for many global investors right now, and the ongoing interest in what is going on and how can we have, or how close to normal are we in terms of trading in Russian stocks? Well, not all that normal right now, because yes, we do have more assets trading, more stocks trading on the Russian exchange today, but we still have a lot of signs of how things are not normal. We have limited trading hours, we see foreign investors unable to sell, and we see no short selling allowed over in Russia. In terms of the ruble, President Putin, of course, wants ruble to be used to pay for gas, to pay for Russian exports, and he says that we're going to get more detail on that by the end of this month. We put in the Russian 10-year yields as well here. Kailey.
All right, so clearly already a lot to pay attention to on this Monday, and there is a lot more ahead this week. The U.S. budget proposal will be released later on today. Then tomorrow we'll get the latest U.S. consumer confidence figures. OPEC Plus will meet on Thursday. On Friday, it is Jobs Day here in the U.S., and also on Friday, EU and Chinese leaders will be hosting a virtual summit where Russia's invasion of Ukraine is expected to dominate the agenda, Matt.
All right, of course, again. Inflation concerns also dominating the agenda, and they continue to pummel the bond market, prompting more buying from the Bank of Japan, as you showed us earlier, and an inversion of a key part of the U.S. yield curve. 2022 losses now exceeded the full-year record, as we've been talking about. We're joined by Bloomberg's markets editor, Christine Aquino. So it's been a bad quarter for bonds, Christine.
Yeah, Matt, you could say that. No, it's really quite a historic sell-off here that we've seen. I mean, we were just talking last week about the global drawdown in bonds across the globe. This is sovereign and corporate bonds as well. And we saw that reach $2.6 trillion from the peak to trough decline. And that's really something. That's nothing that we've ever seen before, that's surpassing even what we saw in the global financial crisis. And the bad news for bond bulls out there is that it doesn't look like it's going to be over just yet, because I think, there's still room to reprice really the thinking around the Federal Reserve path. We've seen a number of officials really hammering on that point of 50 basis point rate hikes coming, and we haven't even seen that being fully priced in for May. That might be the next battleground here, Matt.
Christine, good morning. So we see a further inversion of another curve in the United States. So that continues to focus us on the bond market story, as you rightly say. What do we learn from what the BOJ is doing? Is this all around the pace of the move? Central banks just, yes, they want tighter conditions in some parts of the world, but they don't want things to move quite so quickly. What's the lasting impact? We're down 2% on the yen versus the US dollar right now.
Absolutely, Anna. I think it's really significant the way that the Bank of Japan is reacting here. They have traditionally been a very measured sort of central bank. They really hate when things are moving very, very fast, and that's something that they have acted against in the past. And I think also what's important to note here is that the Bank of Japan is probably one of the more dovish
dovish central banks on the spectrum. If we're talking about central banks really thinking about where they stand on the normalization process, the Bank of Japan is a little bit behind the rest of the world here. And it's really traders now kind of zeroing in on it as kind of the next potential arena where they can really challenge the central bank and really kind of dare them to kind of leave behind that very, very easy monetary policy that we've seen for the past decade.
All right, Bloomberg's Christine Aquino with everything going on in these bond markets. Thank you so much. Now let's talk about what's going on in geopolitics. President Biden trying to clarify his call for Vladimir Putin to be removed from power, saying he is not looking for regime change. European allies, of course, raising concerns about his remark from over the weekend, and critics warning he risks inflaming tensions with Russia.
We will have a different future, a brighter future, rooted in democracy and principle, hope and light, of decency and dignity, of freedom and possibilities. For God's sake, this man cannot remain in power.
For more, our Washington correspondent Anne-Marie Horder joins us now from Warsaw in Poland. So Anne-Marie, that's what the president said. How is the administration trying to spin it now?
Well, there's been a lot of diplomacy over the weekend, or backtracking, if you'd say, from the White House. Immediately after those comments, journalists were scrambling to try to get some clarity from the White House if the president had gone off script, or did he intend to say that Putin should not remain in power. And the White House said that the U.S. was not calling for regime change. And then we heard from Secretary of State Antony Blinken as well over the weekend. Take a listen.
As you know, and as you've heard us say repeatedly, we do not have a strategy of regime change in Russia or anywhere else for that matter.
So the White House says no strategy of regime change. We've heard from a number of allies here in Europe. Olaf Scholz saying that NATO allies are not looking for regime change, but he also ended his interview with German press saying the president said what the president said.
Yeah, and of course the president also called Putin a butcher. You can't expect him to want a butcher to be in charge of a major nation. On the other hand, obviously they have certain goals that precede others. Let's talk about how the Ukraine-Russia talks are going in Turkey. What do we know?
Well, we don't have those talks just underway just yet, Matt, but we are expecting them this week. We know that Turkey has been trying to be a mediator of sorts between Kiev and Moscow. And what we do know from President Volodymyr Zelensky speaking to Russian independent journalists yesterday, which Russian press is not allowing to show this interview, but he had said that Ukraine is willing to give up this neutrality or become neutral, not go for the NATO alliance. But the issue is that is written into Ukraine's constitution. So if they were to able to get to any sort of peace agreement, especially when it comes to their ambitions, when it comes to NATO, Zelensky would then have to bring it back to his parliament for a referendum. So it's a tricky path forward. But there is plans for these two countries to meet this week. So potentially there is a slight glimmer of hope when it comes to the diplomatic path. But we should note it hasn't changed anything on the ground.
Okay, yeah, we're just looking at those devastating images of Mariupol from the air. Thanks to Anne-Marie Horder, our Washington correspondent on the road for us in Warsaw. China is grappling with a number of COVID outbreaks across the country, the worst since the pandemic began. In an effort to curb the spread in Shanghai, the city of 25 million people is being locked down in 2 phases this week for mass testing of residents. For more, we're now joined by Charlie Zhu, Bloomberg's Shanghai bureau chief. Charlie, give us a sense of how this is being done, locking the city down in sort of 2 halves. What's the strategy?
As you said, the lockdown is designed to help, eliminate infections, identify positive cases, eliminate infections through isolation and treatment, just like what they have done, to other cities like Shenzhen, and Xi'an before. And as you know, China is still trying to stick to its COVID-0 strategy, but the Omicron variant is highly infectious, and that's really challenging that policy, whether it's going to work or not, we don't know. As for why they are doing the lockdown now, it's because infections are still surging despite lockdowns of select residential compounds around the city in the last week. So Shanghai reported 3,500 cases for Sunday this morning, another record. That's up from like zero at the beginning of this month. And Shanghai now has overtaken the province called Jilin in the northeast of the country as China's biggest COVID hotspot. So the situation is not doesn't look that promising.
All right, Charlie Zhu, Bloomberg's Shanghai bureau chief, thank you so much. And of course, as part of that, Tesla has gotten wrapped up in its shuttering production in its Shanghai factory until April 1st. Tesla is lower by about 0.3% in early hours. Now, let's take a look at some of the other stocks on the move in pre-market trading here in the U.S. One I really wanted to point to is Apple. It's down about 2% in pre-market trading after a report from Nikkei overnight that it's cutting its production of the iPhone SE next quarter by around 20% amid lower demand. So that is weighing on those shares this morning. Other shares getting weighed on is basically anything in the energy complex, as we are seeing declines in oil. That is reading right through to ExxonMobil, which is lower by about 1.5% in early hours. But while oil is lower, Bitcoin is higher. That stealth rally continues, as Matt was telling us about earlier, and that's giving a nice lift to crypto-related equities in the pre-market trade here in the U.S. Coinbase Global is one of them. It's up about 4% before the bell, Anna.
Coming up on the program, then, Kailey, Julien Lafargue, Barclays Private Bank Chief Market Strategist. What does he make of the move higher in interest rates or the move higher in yields globally? And can we continue to see stock resilience in the face of that? We're certainly seeing that in Europe today. And on Ukraine, Leslie Vinjamuri, Chatham House head of US and the Americas program. She can give us some of the context to President Biden's comments in Warsaw over the weekend. Plus, charting a new path, Vanguard is pivoting away from founder Jack Bogle and its irking loyalists inside the $8 trillion mutual fund firm. Read more in today's Big Take story by typing NI Big Take on your Bloomberg terminal. This is Bloomberg.
Welcome back to Bloomberg Surveillance, the early edition. We are simulcast on both radio and on television. I'm Matt Miller here in New York with Kailey Leinz, Anna Edwards with us out of London. Now, for a long time, we've been talking about the possible end to the 40-year bull market in bonds. And this is a chart for those of you listening on radio that you will have seen many, many times in the past decade or two anyway. It's the 10-year Treasury yield in a range. The question is, has that yield now come out of that range as we come up above 2.50%? And does that mean the bull market is over? Eddie Vanderwalt joins us right now, Bloomberg Markets Live strategist, to talk about, well, many things. But this, I guess, is front and center, Eddie. With 250 on the 10-year, it's really a shockingly high number. We've come so far so fast.
You know, it's absolutely astounding. The bond market's absolutely front and center at the moment. You're right. And, you know, that two-year Treasury chart, it's going parabolic. It's looking a bit like, you know, Bitcoin, pick your year, 2017 or whatever. It's really had a significant run-up. Now, the question is just how much tightening is the market going to price in, and whether equities and other assets can sustain, you know, that view of tighter policy.
And something else that's in focus this week. So we're focused on the Treasury curve, Eddie. We're also focused on oil. Oil prices really moving substantially lower, down by 3% today. 116 is the Brent price right now. And we head towards an OPEC meeting where there doesn't seem to be expectation that we'll get any change in the production, the output plan. Is this all about China, nervousness about Chinese growth?
I think a little bit. I think that there's a lot of that. I also think that we are getting to levels. I mean, people have talked about the US shale production all year, saying when is that going to pick up? I think, you know, we're getting to levels, we have been at levels for the last couple of months now, where the shale producers can very profitably, you know, pump out production. Now, they've said that they don't want to do that while, you know, unless this looks sustainable, and these high prices do look sustainable at this point.
Okay, thanks very much, Eddie. Eddie Vanderwalt of the Bloomberg Markets Live team joining us here. Just a few headlines coming across the Bloomberg from the Kremlin saying Biden's statements on Putin are alarming. That is the line from the Kremlin. We've seen Washington trying to walk back those comments from President Biden over the weekend. The Kremlin saying no progress has yet been made in talks with Ukraine. And on the subject of energy, saying that the Asia-Pacific market will absorb Russian oil that Europe won't take. We'll continue to monitor for the latest. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. The U.S. says the revival of a nuclear deal with Iran may not happen soon. Iran has made a number of requests recently, including that Washington removes the Islamic Revolutionary Guard Corps from a list of terrorist organizations. The U.S. is reassessing the political cost of reviving the 2015 pact, which of course limited Iran's nuclear activities in returns for sanction relief, including on oil exports. Barclays expects to take a $591 million hit after making a mistake on structured notes and exchange-traded notes. The British bank issued about $15 billion more of them than it had registered for sale. That required Barclays to repurchase the notes.
Coming up on the program, Julien Lafargue, Barclays Private Bank Chief Market Strategist. We'll get to him on his thoughts on what's happening in the markets at the moment. This move higher in yields so quick, what is it doing to his assessments of bond markets and of other assets? Because we have seen, of course, stocks being pretty resilient in the face of all this. Certainly in the European equity session, we're seeing that today. Stocks here in Europe up by 0.7%. US futures, though, flat to negative. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. The biggest global bond rout of the modern era gets even worse. Treasuries are sliding, a key portion of the US curve inverted, and the Bank of Japan stepped in twice to cap the rise in yields. Investors are dumping bonds on expectations the Fed will lead an aggressive wave of global central bank tightening. President Biden is trying to clarify his stunning comment that Vladimir Putin should be removed from office. He says he was not calling for regime change. European allies raise concerns about the president's remarks, and critics say he was further inflaming tensions with Russia. The city of Shanghai will be locked down in 2 phases to conduct a mass testing blitz for the coronavirus. The outbreak is challenging China's zero-tolerance approach to the virus like never before. The Tesla factory in the city will be shut down for 4 days. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Matt, of course, we talked a lot about the Oscars. Maybe we'll leave that one there. But we certainly see some really interesting narratives developing across markets. The transatlantic divergence this morning is particularly of interest. What are you focused on?
Yeah, absolutely. I mean, we don't see a lot going on in U.S. stocks right now, but there is a lot going on in other asset classes. So S&P futures are down, I should say, 0.1%. We've seen them basically unchanged throughout the program. 45.31 is the level here. What I find interesting is the 10-year yield, now over 250, so 2.5029, as investors let go of some of that debt. NYMEX crude coming down as well, but it's still holding almost at 110, 109.12 for a barrel of Texas Intermediate. And Bitcoin probably the most. Well, no, treasuries, I can't make up my mind, but Bitcoin is also very interesting because it's erased its losses for the year. It's had this slow and steady rise, which is very unlike Bitcoin, not a lot of volatility over the past few weeks, and is now trading at $47,000. So I can't decide if I prefer 250 on the 10-year or 47,000 on Bitcoin, but obviously one is a much more widely held asset. Kailey?
Yeah, fair enough, Matt. Well, I would point out, though, that that move in Bitcoin is influencing the way equities are moving in early hours because some of those crypto names are trading higher, including Coinbase, which is up or Marathon Digital, which is up nearly 10% before the bell in pre-market trading. But as you mentioned, oil is moving to the downside. That is weighing on energy names, including Occidental Petroleum, which is down by about 2.2%. Apple is down about 2% as well. Nikkei reporting overnight that it's cutting its production of the iPhone SE by 20% next quarter due to weaker demand, so that is dragging on those shares. And then finally, speaking of production-related issues, Tesla is down about 0.6%. It's had to shut production in its Shanghai factory for 4 days because of that phased shutdown of the city in China, Anna.
Kailey, European equity markets then moving to the upside today, despite a flat to negative picture on US futures, despite the concerns around what's going on in China and the global growth there, despite the higher yield environment, and the higher yield environment shown here in Europe, represented by the UK 10-year. I could have put in the Bund, though, as well. It is a global story. We're seeing those yields rise. Certainly, we've talked a lot about the Japanese case, and yet we are seeing that stocks are fairly resilient in the face of that. Banking stocks clearly have their own narrative going on around yields and that steeper yield curve maybe benefiting many of those, and so the banking sector doing well in the European session. InPost, this is a Polish company. We focus a lot on Poland for the geopolitics at this point, but this is an interesting buyout story. It's a Monday, so merger Monday, or a focus on M&A perhaps is justified. And we see a lot of chatter in the markets and some talk that perhaps there's going to be some buyout interest in this particular name, and the stock is up by just over 30%. Let's quickly update you on what's going on Russian assets then right now. We have the MOEX, the Russian index, down by 1.6%. Of course, it opened at the end of last week, and a lot of focus on what we're seeing there in terms of Russian buying, but this isn't a normal market yet. We haven't got the ability of foreign owners of stocks to sell those, so foreigners can't sell, and we also see no short selling, so we're not talking about a normal operation. Reduced market hours as well, part of the story there. We'll see how the ruble performs. It is moving higher today. We'll see how the ruble performs in the context of President Putin's demand that he wants all of those Russian energy products to be priced in rubles and paid for in rubles. Resistance, no doubt, from Western countries to that, Kailey, but that is certainly one of the big talking points at the moment.
All right, we continue to monitor Russia. Let's bring in now Julien Lafargue, Barclays Private Bank Chief Market Strategist. Julien, let's drill down into what we're seeing in the bond market. Selling pressure really across the world, curves inverting here in the U.S. How much further can it go before it may actually present a buying opportunity?
Well, we do believe that we're starting to get at a point where locking in rates is an opportunity. It really depends how you're thinking about rate. At the end of the day, some people are buying rates just because they want to hold the bonds that they're buying up to maturity. And in this current setup, it might not be a bad trade to lock in 2.5% on the 10 years. Of course, if you're more of someone who looks at the mark to market and from that perspective, performance, it may not be great in the next few weeks or months. So it really depends what type of bond investors you are. But at 2.5% on the 10-year, we do start seeing some opportunity.
What kind of rate increases, Julien, do you expect this year? I mean, are we looking at maybe multiple 50 basis point hikes?
Well, that seems to become the consensus. And of course, if you look at the situation as it stands today, that would make sense. You have a very strong inflation in the US and a Fed that is trying to restore its credibility. So the bigger they go, the better they have a chance of achieving that. Now, 12 months or the next 9 months in this year are still a very long period of time. And 3 months ago, we weren't thinking that the Fed would hike almost at all. So a lot can change. It looks to us that the Fed will be aggressive, at least initially, but there is a strong chance that, depending on how things evolve throughout the rest of the year, the Fed may decide once they've restored that credibility to pause and assess. So yeah, overall, you might see as much as 6 hikes this year, but it might be front-loaded.
Will they have to bring about a contraction in growth to restore that credibility, maybe even back-to-back quarters of contractions?
Well, so that, I guess, would be a recession, but it's hard to see how they will manage to bring down inflation without participating to some demand destruction. That's the only way you can solve inflationary pressure when they're coming from the supply and not the demand side of the equation. So we do expect that growth is probably going to be much lower in the next couple of quarters. We still expect healthy growth by historical standard in the US. So maybe a bit of a dip towards the middle of the year, but we don't think that a recession is on the card. If any, it will be very mild in our opinion.
Julien, how similar or different are the Fed and the Bank of England narratives at this point? Because the Bank of England was a little ahead in terms of starting the rate hiking earlier. Does it offer any clues as to where the Fed story goes, or would that be to overstate it? Because it's really interesting the way we've moved from thinking about a 50 basis point increase in the UK just a couple of months ago to now talking about pricing in more than a quarter point rate cut over the next 2 years. Is this a story that stays on this island, or does it have a further global resonance?
Well, it might be a template for how other central banks will see things play out. At the end of the day, what the Fed said initially was that he wanted to remain nimble, and that goes both sides. So right now, he wants to be on the more aggressive side of nimbleness, simply because the data suggests that they should do so. But if the data turns around mid-year, we would expect the Fed to say what they say they would be, which is to be nimble and therefore maybe pause. We don't think a cut is necessarily on the card for the Fed at this point. But I think what the BOE has experienced is likely something that other central banks in the world will face at some point because the data is very fast changing.
Julien, thanks so much for joining us. Appreciate your insight today. Julien Lafargue there, Barclays Private Bank Chief Market Strategist. Now, President Biden is trying to walk back his call for Vladimir Putin's removal, saying he isn't seeking regime change. Joining us now is Leslie Vinjamuri, Chatham House head of U.S. and the Americas program. And Leslie, we've heard a lot of people say he's trying to clarify his position, or he's trying to contextualize it. But if you call a world leader a butcher and then you say, for God's sakes, he can't remain in charge, your position is pretty clear, isn't it?
It depends on how you think policy is made. U.S. foreign policy is made by the president with his closest advisors in consultation, in this case, with America's closest European allies. And so I think the U.S. has been very clear on what its position is on the use of force, on regime change, and drawing those very careful lines. President Biden is deeply emotional. He had just been to see refugees in Poland at the end of a very intense trip. And he perhaps said, through his words and his emotions, how he feels about President Putin. But no, he hasn't changed U.S. foreign policy. The problem, as we know, is that there are many people across the world, and certainly in places that the U.S. is trying to influence, whether it's India or Russia, China, that see Americans' use of power very differently than how the U.S. does. They see America as a country that is frequently engaged in regime change. And so the words of the president will be read very differently from how he and his administration intend them, and very differently from how they have very clearly communicated the limits of the U.S. intentions when it comes to the war in Ukraine.
Well, Leslie, if the root of this conflict seems to be Vladimir Putin, the man, why not push for regime change? Why is that a dangerous proposition?
Well, for starters, Russia is a nuclear armed state. We know that the U.S. And its European allies have no interest in engaging directly in military conflict that could escalate. The U.S. and President Biden in particular have been very committed to what's called a doctrine of restraint, that is exercising U.S. power in a way that's really clearly set to a set of strategic priorities, which are about deterrence of great power threat, certainly any direct great power competition or conflict, but not engaging in regime change. If you go back to the summer when Biden pulled U.S. forces out of Afghanistan, no matter what any of us may have felt about that decision, it was also a clear indication that this is a president that seeks to limit the use of military force, certainly doesn't aim to have direct great power war.
Leslie,
or
I get that it's not our policy to go in there directly and take out Vladimir Putin, but I feel like the administration has communicated quite often that the point of the sanctions, at least partially, is to bring about regime change, right? They continue to say, we hope to put pressure on those around Vladimir Putin, and maybe that's going to lead them to take him out in a kind of Julius Caesar moment.
Actually, that's not what the president has said. The president's been very clear, as has the administration, over the course of 4 weeks, that the goal of sanctions is not regime change. The goal of sanctions is to change the behavior of Putin when it comes to his brutal military intervention, killing of civilians in Ukraine, to get him to pull his forces back and to end that war and to engage in a credible way in peace talks. So sanctions are, aimed at sending a very clear signal to inflicting economic pain, to reducing the ability of Russia to execute that war, and to really make it difficult to fund the war and to finance the war. So I think that's been clear. That's why so many partners have worked together across Europe and far beyond, across Asia, to really support those sanctions. It's really to change the behavior of Russia, to demonstrate that the world is not on the side of Russia's, again, very brutal, devastating attacks on the people of
Leslie,
Ukraine.
do you read much significance into the comments, the statements we got from Russia over the weekend about a change in their direction, their early goals having been achieved and a focus now on the east? Of course, it was then followed very quickly by attacks on Lviv, which is a city in the west of Ukraine. So read into that what you will. But do you take any comfort from the fact that maybe that Russia is scaling back its ambitions in Ukraine?
So far, their behavior doesn't demonstrate that. I think that Russia knows, as does the rest of the world, that they've failed just on a pure military level to achieve their ambition. They've demonstrated their weakness in conventional terms. And some of the very brutal tactics that they're using are a sign of that weakness. So it does seem inevitable that they will have to scale back their ambitions. But again, the attacks on Lviv seem aimed at, sending a signal to President Biden, who was very nearby at that moment in time.
Yes.
But we're continuing to see operations on the ground that don't reflect the words of Putin.
Okay. What kind of impact do you think the visit to Poland in particular and meeting refugees and that experience will have on President Biden and the administration as they take that experience back to the United States? Leslie, clearly we had a doubling down on commitments to NATO.
I think we're going to see, again, an intensified effort to get more partners on board of those sanctions, to take the sanctions to the next level, to really work on the energy question. And also there will be a very intense debate about what kinds of military supplies to send to Ukraine. And that is deeply contested, I think, across many, certainly within the US Congress, who would like to see more. But again, I think that we will continue to see a very careful calibration and an exercise of restraint. It's not seen as restraint by Russia, of course. I think the other very tricky thing, and we're very far from it, but it's going to be coordinating on that question of when and how and which sanctions are lifted. We saw Liz Truss make a comment about when sanctions could be lifted. I don't think that that's been agreed across the allies or the partners who are participating in sanctions. That's where things will get very, very tricky from the point of view of maintaining that unity.
Leslie, thanks so much. Leslie Vinjamuri, Chatham House head of US and the Americas program, giving us that US perspective then. Coming up on this program, Bitcoin's stealth rally has put it back into positive territory for the year. More ahead. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, Grayscale CEO Mike Sonnenschein. That's at 10:30 a.m. in New York, 3:30 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz in New York and Anna Edwards in London. Bitcoin has staged a stealth rally over the past few weeks that pushed it past the $45,000 level, and it erased its losses for the year. Mike McGlone, Bloomberg Intelligence commodities and crypto strategist, joins us now to talk about what's going on. To me, Mike, it's the stability, the seeming lack of volatility. Of course, if you look at the Bitcoin chart, compared to a lot of other assets, it's still incredibly volatile. For what we've been used to, it feels like it's come slow and steady up from 30,000 to 47. What do you think is behind it?
I think you got it, Matt. It's amazing how it just keeps proving itself. I'm kind of like, oh my gosh, it's still doing it. And the recent example is what happened to nickel. Remember, it shut down for a couple of weeks and couldn't trade. Bitcoin never stopped. So to me, that was very profound what's happening with Bitcoin. It's becoming the world's most significant traded vehicle ever. 24/7, you can have price discovery, and it's gaining more and more adoption and liquidity and interest and demand every day. So it's very impressive. The key thing now is up on the day, up on the week. It's up really 5% from where it settled on Friday. Remember, it trades on weekends. And the stock market futures being down means, okay, by the end of the day, if stock market futures are up, we'll say, okay, Bitcoin gives the leading indicator. But it's more significant. If Bitcoin goes up, stocks and commodities goes down, that potentially is that key inflection point a lot of us have been looking for, where this unique asset with no elasticity of supply is starting to show its bullish underpinnings.
Speaking of inflection points, Mike, Bitcoin has been in a range for basically the entirety of 2022 thus far. Can this represent a meaningful breakout?
It could be, Kailey, but if the stock market drops 10, 20%, Bitcoin should have a problem, but it's already proving it's going to come out ahead. So I think that's the key problem this year, the ebbing tide, fighting the Fed. You know, if you allow more people to buy more stuff, means the stock market going up, it's kind of a problem. Bitcoin's been going down with that. But today's another example. Stock market futures down, Bitcoin up. It's in that transition. I think by the end of the year, who knows where everything's going to be. I think Bitcoin's proven itself. And then you look at all the other crypto assets, even Ethereum's still down in the year. And most of the other ones, all the 18,000 other wannabes, they're showing the purging that was way overdue of excessive speculation.
Mike, I was looking at some commentary around the 50-day moving average on Bitcoin that suggested it looked overbought, but actually saying that this signal has actually in the past been a sign that a buying signal. Which are the signs that you look for when you look talking about either technicals or other flow to talk about where we go from here?
Well, Anna, I'm glad you brought up that 50-day, because the key thing I watch is the 50-week. In my days in the trading pits, when I used to have hair, the dailies will just make you lose your hair. It's the weeklies which are great. So today, I think it's more significant that Bitcoin's opening above its 50-week moving average in the first time in a few months, which is heading downward. So maybe it's pointing it back up. So we'll see by the end of the day. But that's the key thing, is the day's good for the day traders. I think you have to focus on that more. But me being on a strategic side, big picture, it's the 50 weeks. That's the one that matters. But Bitcoin's basically the same price as it was over a year ago. I think it's just a matter of time that it breaks out to that trend, that enduring trend, which we know is higher.
All right, Mike, thanks so much for joining us. Mike McGlone there of Bloomberg Intelligence, senior analyst for commodities out of Miami. For more on the world of decentralized finance, be sure to tune in to our new program, Bloomberg Crypto, Tuesdays at 1 p.m. New York time. Tomorrow, we're going to be speaking with Meltem Demir's, Chief Strategy Officer at CoinShares, as well as Katie Stockton, founder and managing partner of Fairlead Strategies. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Well, Anna, Matt, I continue to watch the bond market. The 10-year U.S. Treasury yield is at 250. The 5/30s curve have inverted for the first time since 2006. And the 2s10 spread right now sitting at just 13 basis points, Matt. Really quite remarkable, yet J.P. Morgan saying stocks can continue to look through this for now.
Yeah, I think the spreads are, a lot of us are keeping a very close eye on the spreads right now, especially after last week. We saw the 3s, the 5s, and the 7s all invert. Now at 250, it's interesting to see if the 2s can get that high. That we're only at 237, but that's historically been the major marker that the market looks for in terms of a recession.
Yeah, everyone seems to have their favourite part of the yield curve, don't they, to look at for the clues about what happens from here. I'm intrigued as to just how resilient stocks can be. Certainly they are here in Europe, even as US futures look a little more shaky. The S&P up by more than 8% in the past 2 weeks, recouping losses since the war started. So that's the extent of the resilience we've seen from global stocks. More Bloomberg Surveillance is ahead. This is Bloomberg.